So we are going to look at the calculation aspects of the cash book. That is the practical aspects of the cash book. So we are going to look it from the illustration. So this one is illustration 1. It says the following details were extracted from the book of Somi Enterprise for the month ended. From the book of Somi Enterprise for the month ended 31st July 2025. So what happened? On 1st July 2025, he said he started business with cash. So this one, like, remember I told you that the amount that you use to start up a business is called capital. So the owner invested the capital of 25,000 naira in the business. So, and this capital is cash inflow, because in our previous class I told you that capital is a cash inflow and it should be recorded in debit side. So you have to you write the date of the transaction. What happened on 1st July? You write 1st July 1st. Then the owner started business with cash. So he started business with cash, which is what? Capital. The money he used to start up a business is called capital. So you write it under particulars. You write capital. So the capital of how much? The capital of 25,000 naira. You write the amount, 25,000 naira. Then what again? What happened again? On July 3rd July, the owner, he bought goods for cash. Goods of how much? 8,500 naira. So this one now is the money that is going out of the business, because he bought goods. So when he purchased these goods, the money goes out of the business because he used the money to buy the goods. Therefore, this is cash outflow because the cash is going out of the business. So remember, cash outflow is recorded on the credit side of the cash book. So this, he bought goods, then you write the date. It should record in the credit side. So you write the date, July 3rd. Then what happened on July 3rd? Purchases. Because you see this one, anytime the item purchase is not mentioned, you change it to what? Purchases. If you buy something, or if the owner purchased something, or if the owner buys goods and the name of that goods was not mentioned, you have to change it to what? Purchases. But if the name of the item is mentioned, you have to write the name of that item. Example, if the owner bought furniture, you write furniture. You're not going to write purchases. You write furniture because that thing the owner purchased was mentioned. But this one, buy goods, there is no particular item of the goods or the particular nature of the goods he buys. So that is purchases. You change to what? Purchases. So purchases. Then you write purchases here. Purchases of how much? 8,500. Then what happened again? On July? Okay, on July 5th. Cash purchases. So we are saying on the same cash purchases. So the cash purchases means the amount, the cash spent on the purchase of an item. The cash spent in order to buy goods. That is what is called cash purchases. So they are the same thing with this one. It is the same thing with this one. So it's the same thing with the two of them are the same thing. So cash purchases or bought goods for cash, they are the same thing. Therefore, you write cash purchases of what? 12,000 naira. So July 5th. You write 5th. Okay. Purchases of how much? Purchases of 12,000. Then we move over to the next one, July 7th. What happened to July 7th? paid office rent in cash. This is cash outflow because the cash is going out of the business. Paid office rent. So he paid office rent. It should be recorded on the credit side. Office rent. So what happened July 7th? Okay. So July 7th, you write office rent. Office rent. How much? Office rent of 3,000. Then what happened again? On July 10th, July, what happened on 10th July? Sold goods for cash. So he sold goods for cash. So this one is cash inflow because this is sales. So when you make sales, you receive cash. So he sold goods. He sold goods for cash. So it's cash inflow. So the money is coming into the business. So on July 10th, what happened? He sold goods. So you have to change because the name of the goods was not mentioned. So this is he sold goods. So this is, you change it to what? Sales. You change it to what? Sales. You write it there. Sales. Sale of how much? 15,000 naira. Then what happened on July 13th? July 13th. Cash sales. Cash sales. So cash sales means the cash realized from the sale of goods. So it is cash inflow. It should be recorded in the debit side. So you write sales. So how much? 30,000 naira. You write 30,000 naira here. Then what happened again? What happened on 17th? On 17th July, paid Joneb in cash. Paid Joneb. So when you pay Joneb, the money is going out of the organization. So it should be recorded on the credit side. So July 17th. So who did you pay? Joneb. I want to tell you something. Anytime the name of someone is mentioned in a transaction, like something like paid so person, receive cash from someone. So if anytime the name of an individual is mentioned, you have to write the name of that individual. That is personal account. You have to write it, the name of that person. Paid this person. You write the name of that person. So you write the name of this person, Joneb, in the particulars. Then how much did you pay Joneb? Did you pay Joneb? You paid Joneb cash of 4,000 naira. Then the next one is the next transaction is July 20th. Paid wages in cash. Paid wages in cash. Wages of how much? Wages of 9,000 naira. So it's cash outflow. It's cash outflow. You write it. You write July 17th, July 20th. So July 20th, he paid wages. So you have to write the wages. You have to write this item. What do you pay? You write wages. You paid wages. Wages. So wages of how much? So like I said, so wages of 9,000 naira. You write 9,000. Sorry, you write wages. You write wages. And you come to the amount and write 9,000 naira. Then what happened again? On July 27, sorry, on July 23rd, you receive cash from Wumi. You receive cash from Wumi. So this is cash inflow because it is the cash that you receive. So the cash is coming into the business. So from who? From Wumi. So you receive cash from this person, from Wumi. Therefore, you go to the debit side. You go to the debit side and write the date. Which date is that? July 23rd. Then from who? From Wumi. Then how much did he receive from Wumi? He received cash of 1,000 naira from Wumi. Then so the cash from Wumi. So another one is July 27. July 27. What happened on July 27? Pay salary. That is salary paid in cash. Salary of how much? 10,000 naira. This is cash outflow because the cash is going out of the organization. So you come to the credit side and you write salary. Sorry. You write the date, which is 27th. Then you write the salary. Then what is the amount he paid? 10,000 naira. You write it here, 10,000 naira. Then the next transaction is on July 30th. What happened on July 30th? Bought furniture for cash. So he bought furniture for cash. This is cash outflow. The money is going out of the organization. The money he used to buy the furniture is going out of the organization. So therefore, you write the date. The date is 30th. Then, what are we going to write here? We are going to write furniture here because the item was mentioned, and this is asset. So you have to write it, the name. You have to write this in furniture. What you are going to write. This is what he bought. So what is the amount of the furniture? The amount is 6,000 naira. Then the next transaction is sold equipment. Sold equipment for cash. So this is cash inflow. He sold this equipment for cash. So he received cash from the sale of the equipment. So July 31st, you write 31st. Then you write, what are you going to write there? Equipment. So how much did he realize from the sale of the equipment? 5,000 naira. You write it, 5,000. Then, is there any other transaction that you have not touched? No, we have completed. You have recorded everything here. So what are you going to do now? We are going to calculate. We are going to balance the amount. So let's start from this place, from the debit side. We start calculating from the debit side. Let's see, 25,000 naira plus 15,000 plus 30,000 naira plus 1,000 plus 5,000 naira will give you what? If you calculate all of them, it will give you it will give you 76,000 naira. So what are we going to do? We are going to write 76,000 naira here. So we are going to write 76,000 naira here. This is what we, so 76,000, we write 76,000 naira is total amount. This is, remember, this is when we sum the whole figure here, we get this one. So we calculate this, we get this one. Then what are you going to do here? in accounting, the two balances, the two figures, it must balance. The debit side and the credit side must tally. So the amount must tally. You cannot have a different balances here. So if you get 76,000 naira here, it means that here you are going to get the same amount here. So we write here what? 76,000 naira. Now, this is 70,000 naira we got here. Remember, we got 70,000 naira from the summation of these figures here, of this amount. If we calculate all of them, you get this. Now, we also write the same thing here, 76,000 naira here. So, in actual sense, if you calculate all these figures, what are you going to get? Are you going to get 76,000 naira? The answer is no. You cannot get this 76,000 naira. So, what you're going to do now is, how are you going to make it to become 76,000 naira? Because accounting, it must balance. The two figures must tally. You cannot have different figures here. If you get any amount you get here is what you are supposed to get here. So you have to balance it to get our balancing figure. So how do we get our balancing figure? So 76,000, first of all, you calculate all of this. You calculate here, from here to here. If you calculate them, you will get what? 52,000. You get 52,500. If you calculate it, you get 52,500. So, therefore, 52,500. Okay, let me write it here. Let me write it here. If you get 52,500, 52,500 is what you're going to get here. So, how much are you going to add to 52,500 to get to for you to get 76,000 naira? So what you're going to do is that you have to do the minus. So this 52,500 naira, you subtract it from 76,000 naira. So subtract this from here. If you subtract it from here, what are you going to get? You will get what? You get 23,500. Therefore, you get 23,500. Therefore, you write here 23,500 is what you're going to write here. So then you write it balancing figure. Balance carry down. Balance carry down 23,500. Then you close the balance. So if you check now, if you calculate all of this now, you will get, if you calculate from here to here, you will get this amount. This is called our balancing figure. This is called our balancing figure. Our balancing figure is 23,500. So this is our main, you write this and you bold it. This is our, so we are done with this account now. So our next account, so we are done with this particular account now. So we are going to look into the